Hi guys, welcome back. This is Bhavan Shankar. In the previous session, I demonstrated about FIMM integration, logistic point of view. In today's session, I am going to demonstrate about FIMM integration, finance point of view. Anyone not watched the previous session? Please go through the link given in the below description box so that you can get complete configuration knowledge of P2P or your FIMM integration. In the last session, we have completed the basic settings related to our MM. Now we will move towards integration. So integration means we are going to integrate FI with MM initially. That is, when we are going to do any logistic activity in the logistic system, we are going to have the accounting document. I will start with the purchase order. RFQ can be added, but it is purely logistic point of view. For us, mandatory is purchase order. First logistic activity is purchase order. Next logistic activity is goods receipt. When we create purchase order, there will be no accounting document with respect to the purchase order. That means we can't see any integration here in this stage. The next logistic activity is goods receipt. With respect to goods receipt, we will get accounting document. In this stage, we will debit inventory and we will credit GRI account. We are not crediting vendor account here. If you credit vendor, it means you are accepting the liability. We can accept once all verification process will be done. Then we can ask the vendor to raise the invoice. In any system, this is the normal procedure. Inventory account will be debited, GRI account will be credited. Documentation point of view, you have two aspects, accounting and metal ledger. In ECC, accounting document will be generated. In S4 also, accounting document will be generated. Then material ledger point of view. What is material ledger? Material ledger is a tool within SAP controlling CO that collects the transaction data for materials whose master data is stored in Metal Master. If you observe the picture, this is a material ledger for a particular material 406. The material ledger shows for the period beginning of the inventory. What is the beginning of inventory? It's a quantity, price, value, then receipts. Receipts from production, receipts from external purchase. It's a quantity, rate, value. Then cumulative inventory. Then consumption. Consumption for production, consumption for sales. Quantity, price, value. Finally, ending inventory. Quantity, price, value. So, whatever ending inventory is there, with that value, inventory valuation will be done. This is the material ledger concept. With respect to this material ledger, we are going to have a material ledger document. Assume in ECC we are maintaining material ledger. For this, material ledger document will be generated. In S4 also, material ledger document will be generated. If you are not configuring the actual costing, then material ledger document will be cryptic. If you configure the actual costing, then you can get the material document in S4 HANA. Both the cases, the tables are not different. The table is only one table, that is AC docket table in case of S4 HANA. In case of ECC, we need to maintain different settings for material ledger. Different tables we have to maintain for material ledger. That's why most of the companies are not maintaining material ledger in ECC. Most of the companies just reporting the inventory, but inventory valuation is not there, as material ledger is not mandatory in every country. In S4, material ledger is mandatory. In ECC also, material ledger configuration option was there, but mostly companies are ignoring it. Because of this, different settings they have to maintain, different tables they have to maintain. For all this purpose, most of the companies just ignoring the material ledger concept in ECC. Now the third one is invoice. Here, after verification of invoice, vendor will raise the invoice, then we will book the invoice in the system. Here GRI account will be debited and vendor account will be credited. Then final is payment. Vendor account will be debited, bank account will be credited. Material ledger is applicable wherever inventory will be there. Whether we are going to procure or whether we are going to manufacture or whether we are going to goods delivery, material ledger is applicable. Valuation of inventory. For valuation of inventory, we have two methods, moving average price, standard price. What is moving average price? The moving average price is a constantly recurring calculation which could potentially change with each invoice or goods receipt. Then what is standard price? Standard price is a predetermined price and both receipts and issues will be valued at this price. I will give you an example of moving average price. For example, take inflow. We have inflow of 100 units. The price is 10 rupees. Then its total value is 100 into 10, 1000. Next inflow 80 units at the rate 12. Its value is 960. Now the total inventory is 180 and its total cost is 1960. Now we have a goods issue to production, issue issue of 110 units. Now the question is at what price you will value this 110 units. If you are following moving average, the cost would be total cost divided by total inventory. This would be your moving average price. Now this 110 units of issue will be calculated with this price 110 into 10.8. This would be the value for your 110 units. Now the closing stock is 180 minus 110, 70 units. 1960 the total cost minus issue to production 1119, 762. This is now the closing stock is 70 units with a cost of 762. Now another inflow came. This is take 150 units at the rate 15 per unit. Then its value is 750. Now the closing inventory is 120 and its value is 1512. Now here inventory price 1512 divided by 120. 12.6 will be the inventory price as per moving average. This is moving average price. What we observe here, if there is a transaction, the price of material keep on changing from 10 to 10.89, 12.6. Like this, moving average price is keep on changing. The benefit of moving average is user no need to do anything. System will automatically calculate and update the prices. The disadvantage is as this price is not uniform, it's a keep on changing. So we don't have any scope for variance analysis because you will not find any variance here. Variance is not there, we can't take any decision here. This is incomplete information. If you are manufacturing anything, then don't go for moving average price. Rather go for standard price. But if your business is very simple, that is trading business, then go for moving average price. In my example, I considered standard price for finished goods and raw material and moving average price for packing materials. For any secondary material, we may use moving average price. The methodology of standard price is we will keep the price uniform throughout the month. Then in month end, we will calculate the actual price and then we will calculate the variance. Then we can take decision. For example, if variance is too much, we may go for outsource the product instead of in-house manufacturing, or we may change the vendor. But in case of moving average, we don't have this information. Hence, moving average price is not acceptable. First, we will create cost object, that is production order from PP. Against that production order, we will issue raw materials. So what is the accounting entry here? Raw material consumption account will be debited. This is P&L category. Raw material stock account will be credited. This is balance sheet category. What are the documents we will get? In ECC, we will get accounting document. In S4 also, we will get accounting document. With respect to cost object, we will get CO document in ECC. In S4 also, we will get CO document as cryptic. Cryptic means we already discussed when there is data flow from other modules to CO. Again, inventory is there. Then we will get material ledger document also. In S4 also, we will get material ledger document. In S4, no cryptic as we are calculating actual cost. Next, we will get production receipt from the same order. First, we created production order. From that production order, now we received the production output. Example 20 units. We got 20 units. That 20 units we transferred from factory to warehouse. What is the accounting entry here? FG stock debit. This is balance sheet category. Change in stock is credit. This is P&L category. Category is P&L. Basically, this is an offsetting entry. So, what are the documents involved here? In ECC, accounting document will be there. In S4 also, accounting document will be there. And with respect to cost object, you will get CO document in ECC. In S4 also, you will get CO document as cryptic. Again, for inventory, you will get material ledger document in ECC. In S4 also, you will get actual ML document. No cryptic as we are calculating actual cost. Now, goods delivered to customer. Now, COGS will be debited. This is P&L. These values we will transfer to P&L and COPA also. And credit will be FG stock. This is balance sheet category. What are the documents? Again same. In ECC, in S4, accounting document, CO document, and here cryptic, ML document, here also ML document. So this is the summary for our entire discussion. So For purchase order, no accounting document. Here we can't see any integration. Goods receipts, inventory will be debited. GRIR account will be credited. GRIR account we can say replacement of accounts payable. That's why both are balance sheet category. What are the documents here? ECC, accounting document, accounting document. Again, with respect to inventory, material ledger document, material ledger document. In S4, the tables are not different. AC docket table only. For the invoice, GRIR debit, vendor account credit. For payment, vendor debit, bank credit. For the production order, that is material consumption, raw material consumption will be debited, raw material stock will be credited. This is P&L category, this is balance sheet category. What are the documents involved here? Accounting document, here also accounting document. CO document will get in ECC. In S4, CO document will be cryptic. Here you will get material ledger document. In S4 also you will get material ledger document. The table is same, AC docket table in S4. Then production receipt from same order. Here what will happen? FG stock will be debited, change in stock will be credited. This is offsetting entry. Here balance sheet category is FG stock, balance sheet category, change in stock, P&L. Category is P&L, but this is basically an offsetting entry. Again, what are the documents involved here? Accounting document, accounting document. In ECC, we'll get CO document. In S4, we'll get CO document as cryptic. In ECC, we'll get ML document. In S4 also, we'll get ML document. Now, goods delivered to customer. COGS will be debited. This is P&L. And FG stock will be credited. This is balance sheet category. What are the documents involved here? Accounting document, CO document, and in this case CO is cryptic. ML document, here also ML document. Here the cost object is production order. In this case also the cost object is production order. Here the cost object is profitability segments. These values we will transfer to P&L as well as these values we will transfer to COPA also. In upcoming sessions more options will be added because of price differences. Thanks for watching. Have a nice day.